If you're an investor and you've got $10,000 laying around, you've even done all your research for stocks investing, and the last dilemma that you've come across is you have to choose between Fiverr and Upwork. Which gig economy stock has more room to run faster this coming year? And that is the question that we'll be discussing today. My name is Lukas, and as an investor from excelwealth.com, I'm always interested in sharing my ideas on investing and real estate and personal finance just with you. For now, let's get into the video. If you're not into these two platforms, we have to backtrack slightly, because over a third of American workers are now a part of a gig economy, which comprises freelance and independent contractor jobs. And that percentage could continue climbing as fresh employment opportunities emerge on the online platforms like Fiverr and Upwork. Now, Fiverr was actually founded 11 years ago, and it lets users post and accept gigs that start at $5. Now, I'm sure you've seen other YouTubers pay other people to do interesting things, like make a commercial of 15 seconds for $25 or $250 or even $2,500, and then compare them alongside each other and make a very interesting YouTube video on that. Now, on the other end, we've got Upwork, which is a fusion of two older platforms, Elance and oDesk. 6 years ago, their job is to connect companies to freelancers. Now, Fiverr went public back in 2019 in June at $21 per share, and it closed nearly $40 on only the first day on the market, and currently it trades at about $240. Upwork, on the other hand, went public in 2018 in October at $15 per share, and it closed at $21 on the first day, and eventually it more than doubled and currently for about $50 per share. Now, Fiverr generated bigger gains than Upwork's, but we shouldn't be judging stocks based on their past performance. Let's take a fresh look at these two growing companies and see which is the better all-round investment just for your money. Before we can actually make a good judgment, a good question to ask is, how do Fiverr, but also Upwork, make their money? Now, Fiverr generates most of its revenue from transaction fees and service fees. Its take rate, or percentage of each transaction it retains as a revenue, rose from 26.7% in 2019 to 27.1% in 2020. Fiverr generated about 70% of its marketplace revenue from 5 countries, which is the US, the UK, Canada, Australia, and New Zealand. And of course, if you know the 80-20 principle, that's where most of your effort should be, in those 5 countries. Its platform offers over 500 categories of gigs, including design, marketing, and of course, writing tasks. Now, on the other hand, we've got Upwork, and Upwork generates most of its revenue from service fees for freelancers, which includes transaction fees for payments and sales of virtual tokens for bidding on the marketplace jobs. It also charges its enterprise client fees for subscription and payroll services. Now, Upwork marketplace take rate is significantly lower than Fiverr's, but it still rose from 13.1% in 2019 to 13.6% in 2020. Its marketplace is split into more than 70 categories, and its freelancers are located over 180 countries worldwide, though it has only a limited physical presence outside of the US. Okay, we've got the numbers on making money. Now the interesting question is, despite their size of the companies, which platform is growing faster? Now, the pandemic generated tailwinds for both Fiverr and Upwork, as people relied more on remote work and freelance opportunities. Fiverr's revenue rose from 77% to $189.5 million in 2020. It ended the fourth quarter with 3.4 million active buyers, up to 45% year over year, as its average spending per buyer rose 20% to $205. Its adjusted gross margin rose from 81% in 2019 to 83.7% in 2020, thanks to its robust revenue growth and rising take rate. And it posted a net profit of $10.4 million for the full year compared to a loss of $16.8 million in 2019. Now, Upwork's revenue rose 24% to $373.6 million back in 2020. Its gross service volume, which measures the total amount spent by its client and users, increased 21% to $2.5 billion. Its full-year gross margin expanded from 71% to 72% thanks to its higher take rate and revenue growth. And its net income increased 11% to $6.1 million. Now, I can see you thinking, wow, all these growth rates are very impressive, but both companies are still unprofitable by the GAAP measurements. Fiverr's net loss narrowed from $33.5 million in 2019 to $14.8 million in 2020. But Upwork's net loss widened from $16.7 to $22.9 million. So despite all those numbers, we can have some rosy expectations. Fiverr expects its revenue to rise 46 to 50% in 2021, and for the adjusted gross income to grow 89% up to 131%. Now, Wall Street expects its revenue and earnings to grow 52% and 31% respectively this year. Fiverr plans to continue expanding its reach in categories and overseas market, and believes the take rate will modestly improve as it will roll out new features for freelancers and integrate its recently takeover of Working Not Working, a higher-end marketplace for creative talents. Upwork expects its revenue to increase 23% up to 26% in 2021 and has reiterated its goal of generating more than 20% revenue growth over the long term. Analysts expect its revenue to rise 25% this year. Now, Upwork expects its gross growth in mainly flat at a midpoint as it continues to expand, but analysts expect that it narrows its non-GAAP losses per share this year. Now, it seems we're all good on both stocks, but there is an edge to this story. Fiverr trades at over 190 times forward earnings and nearly 30 times this year's sales. Those high valuations could limit its upside potential, especially as higher bond yields spark a rotation from growth stocks to value stocks. Upwork looks cheaper at 12 times this year's sale, but is still pricier than other tech stocks that generate comparable growth rate. Now, a good alternative is Salesforce, for example. This company is expected to generate 21% in sales growth this year, but trade at less than 8 times its forecast. So this might be a best buy as well, right? Now, when we compare these two stocks with one another, you'll notice that Fiverr's growth rates are impressive. But they always say there's a good time to buy a certain stock and there's a good time to sell a certain stock. And I believe that Fiverr currently has the wrong price for the right company in this volatile market. On the other end, we've got Upwork, and their stock price isn't cheap for what you get. But I do believe its better balance for value and growth will make it a safer play on the expanding gig market economy. I wonder what you think of this comparison, and let me know down below in the comments if you agree or disagree with my opinion. If you liked the video, don't forget to smash that like button because it really will influence YouTube's algorithm. And of course, if you haven't become an XL crew member yet, be sure to hit that subscribe button that you see over here, because that way you will become an XL crew member. I thank you very much for watching today's video. Happy investing, and I'll see you in the next video. Bye-bye.